So, and all these companies were mostly in the mid and small cap, characterized by a sustained growth, and there was a visibility of that growth rate going forward. Again, all of them were in single digits when we picked them up. So even in this market, what I'm trying to tell you is that even in this market, there are pockets of undervaluation. And of course, we need to steer away from anything that looks excessively overvalued.
Yeah, hello, gentlemen. Thank you so much for joining the call. Truly appreciate all of you. We want to have a panel discussion out here. So let me welcome Siddharth, Anirudh, and Jamin. Thank you so much for joining.
Thank you, Vikas.
Thanks, Vikas.
Thanks. So the format is very simple. We have investors joined us from different parts of the world. So we have clients from Dubai, we have clients from Spain also, and of course the domestic investors have joined in. So thanks to ET Markets for giving us an opportunity to organize this panel discussion, and thanks to all of you for joining the session and agreed to share your knowledge and wisdom with our investors. So what we're going to do is the topic that we have picked up is valuations. Well, everybody is kind of concerned about it. Those who made it, they are happy, but they are concerned that it's a time to book profits or it's a time to kind of put more money. Let me first of all, let me introduce the panel and myself because I see some of them for the first time out here. And then we will deep dive into the topic. So with me, I have Jamin Gupta. Well, Jamin is a good friend. He has been generating, he's managing for more than 100 crores of his proprietary based funds and growing at 30% year on year, specializing in SME segment. Runs a company and is also part of the STEP debt services based out of Ahmedabad. I had a chance to have a series of meetings with him where I saw the kind of conviction that he brings on the table when it comes to investing in SME. So thank you, Jamin, for joining in.
Thank you, Vikas. Thank you for having me.
With me, I have an extraordinary fund manager, Siddharth Oberoi. He's been into markets for over 28 years. He has been managing public money for over a decade now, and ever since he has taken the IF license, he has outperformed not only the benchmark but the entire industry peer group significantly. So, congratulations, Siddharth. Wonderful job. Able to deliver the deliverables in the hand of investors. Thank you so much. On the other side, we have Anirudh Garg. Well, he doesn't need any introduction. Some of you might have followed him on CNBC or various business channels like the Business, where I personally had a chance to listen to his wisdom. So he's a partner and he heads the research at INV Assets. He brings about, so there's something called human and then there's something called algorithm, advanced algorithm-based quantitative investing. Anirudh is someone rare to find, someone who is able to balance both the sides very well. And when you have a combination of human plus the machine working, obviously the results are I would say only the miracle happens. The outcome is always great. The results are always great. So that happened with Anirudh also. If they, as a house, they delivered, double the benchmark for many years now, and able to deliver the sustainable returns over the past 4 or 5 years. But as a house, they have been doing this equities. They've laid down their hands in equities for almost 35 long years now. Since 1990s, they've been investing in equities, and because of some of their friends and families requested them to take license, they decided to make it more professional, taken the license from SEBI and now running it professionally. And now that Anirudh has taken over, we're running it even more professionally and trying to conquer. So thank you, Anirudh, for joining the call.
Thank you for your kind words, Vikas. Thanks a lot.
So let's start with Siddharth first, because Siddharth, I see that I looked at your portfolio also, and I saw good amount of exposure to mid and small cap. This is 6 months back. So do you continue to remain bullish on mid and small caps, or you think valuation is a concern or any other thought that you wish to add. Over to you.
Yeah. So the small cap space has been very promising over the last 2 decades. In fact, the best returns generated by in the market has been done by the companies which were small, and they migrated to become a mid-cap companies. So immense wealth has been created over the last 2 decades in this space. And you're right that a lot of our portfolio companies are small cap, and we see pockets of underpricing even now. So, just let me just give you what, the small cap and micro cap is basically, characterized by uh, lots of negative issues as well. First is scalability, then is probably management depth. These companies are usually one man shows. The promoters is one single person. So those are certain issues that one faces in the small cap space. Then there's the cost of funding, then the competitiveness, etc. So these are some of the issues. So historically, what has happened is that uh, the small cap companies used to get a lower valuation than the mid and large caps, but that has turned around post COVID. It's actually the opposite now. Most of these companies are getting valued very loftily. In fact, the past growth is now being extrapolated into the future, multiple years into the future. So there are pockets of overvaluation in the market, but overall, we are able to figure out stocks which we think have valuation comfort, and along with this, we are able to make a good portfolio.
Okay, great. Before I move on to Jamin, my second question is to Siddharth. Is that Siddharth? You said that it's been growing at for almost 2 decades now. No denying on the fact that yes, it has been growing. But do you see? Let me ask you a particular question. From 2017 onwards, we saw the index, small cap index, going down. It became 80. Then you had GST implementation, RERA coming in, and then all that 80 became 60, and then 2019, all that economy issues propped up, and then when it started going up again, COVID came, hit the markets, and then 60 became 37 rupees. I still remember, and from 37 it moved up. Now, what do you suggest? What do you sense that? Why is it so cyclical? Number one, and number two, what is your message to investors on that?
See, the period that you are mentioning pre-COVID, it was about 17 to 19 period. So what happened was, as tomorrow is my presentation at your place as well, so I'm also going to explain. What happened was that again, there was a lot of exuberance, and the multiples expanded rapidly, but the growth rate of this small cap was just meager, about 8 to 10%. And so what happened was that these bubbles occur from time to time. One of them, for example, is occurring right now in the maybe SME IPO space, etc. So, but post-COVID, what has happened is that the growth rates of these small companies have actually accelerated, and the P didn't expand that much. As we stand, again, broadly everything is very, very stretched in valuation terms. But again, that's where the acumen of the investor stands. That if you're able to, from all these 5,000-6,000 small cap companies, if you're able to bring about at least 8 to 15, somewhere around that, companies which you think can grow at double digits, and the sustainability of those earnings is quite visible. So once you're able to figure that out, and you see that the valuations are low, you make a portfolio around them. So you're right that we're getting very less stocks at this point of time, but they are not so less that you cannot make a portfolio out of them. Just to give you an example, when we started the AIF in December 22, since today and that day, we've almost bought and exited 80 stocks with almost a 95% success rate. So, and all these companies were mostly in the mid and small cap, characterized by a sustained growth, and there was a visibility of that growth rate going forward. Again, all of them were in single digits when we picked them up. So even in this market, what I'm trying to tell you is that even in this market, there are pockets of undervaluation, and of course, we need to steer away from anything that looks excessively overvalued.